want to introduce Kevin Arajo. He's our guest speaker today from Improve You. I've actually had the pleasure of doing a couple of events recently with Kevin and getting to know him a little bit. And he has a really great story. So I'm excited. I think he's going to share some of that story with you today. So I'm excited for that. And he just does things in a really up way. I've always sometimes had some issues surrounding funding because I don't like putting people in bad positions, but the way they do it at Improve You, they really educate and they help them not actually lose their money, which really matters to me. And I'm sure he'll cover that today a little bit as well. Also, for those of you that have my free score now, the funding snapshot in my free score now is also with Kevin's company, Improve You. And I'm sure he'll touch on that just a little bit today as well. But without any further ado, I'd like to just introduce Kevin. He's going to go ahead and go through his presentation today. If you have any questions about his information as he goes through, please just throw it in the chat and I will man the chat today. So I'll man all your questions. If you have questions if we'll go to questions at the end, he'll leave 15 or 20 minutes for questions. So just go ahead and throw them in the chat. We'll cover them all at the end. Or if you want to just come on and speak rather than just type them in the chat at the end, just raise your hand and you'll go in line from there. All right. Go ahead, Kevin.
Awesome. Number one, I do appreciate you inviting me on today, Stephanie. What's going on, guys? My name is Kevin. And just to piggyback a little bit off of what she was saying, we've been able to do a few events together here within the last few weeks, the last few months. It's been an honor. It's been a pleasure just going around the country, helping educate and bring value to other CROs, other credit repair organizations, and then, of course, other people inside of the financial services space. So I don't want to create a bunch of hyper suspicion. I want to go ahead and just dive right into it. We're going to be covering adding funding as a service so that we can add some additional value and doing it correctly for you guys. So that way, let's say, for example, if you have clients that are also business owners, investors, entrepreneurs, you can add some additional value without necessarily having to redo your current set of operations. So I'm going to go ahead and I'm going to get right into it. So a little bit about me, right? I'm the kind of person that likes to make a good introduction. I want you guys to know a little bit more about me, where I come from, who I am. So to be honest with you, I am the managing partner of Improve You. We're essentially a multi-eight-figure financial services company specializing in financial solutions. I tell people all the time, we provide and we are a solutions-based company. It's more than just funding. It's more than just credit restoration. It's more than mergers and acquisitions and liquidations. We like to provide solutions and then implement those solutions depending on the necessity or the need of the client. I do not come from a financial services background. I'm 26 years old. I've actually been in the hair industry for give or take about 15 years, ever since I was very young. That's where I made most of my youth, if you will. To be transparent with you all, what got me out of the hair industry was actually when COVID came along. I was in Virginia at the time. I was working at a barbershop. And in Virginia, when COVID happened, they actually shut down all non-essential businesses. So anything that was not a grocery store, a hospital, right? Anything that wasn't quote unquote essential to the necessity of society was closed down temporarily for a period of about 4 to 6 months. So I was left in a position to where didn't know what I was going to do for money. Because I was self-employed, I didn't qualify for any rental assistance. I didn't qualify for any government assistance. So just kept standing in the middle of the road, wondering, is this something that I can use and leverage to maintain a family, build a family, and maintain my legacy? So from there, I ended up going down a few roads inside of financial services, and then I finally landed on credit repair. So started my credit repair company in 2023, and I was able to scale that to $40,000 months within the first 90 days of launching. Took a lot of hard work. I was a two-man team. And then from there, I introduced funding as a service to a lot of my clients, right?
Here, I want my bear one.
One thing that a lot of people ask me what was the necessity? What was the turning point? What was the light bulb moment, if you will, as to why I decided to implement funding as a service, right? Number one, I decided I wanted to reach a higher tier of clientele, right? A lot of the times when we're working with customers or consumers that need credit repair, working with people that have already proven, not just to us, but themselves, right? They have trouble paying their bills, they have trouble managing their money sometimes, right? And we still need to be able to service these people in a professional manner, but also provide more value whenever we can. That way, right, they stay in our camp. So we start to implement the idea of being a one-stop shop for everything that they need, right? So essentially, what happened from there is I started to introduce funding as a service, right? So we're talking investors that need capital for real estate, business owners or startups, right, that are opening up a new venture, or even some of the more experienced ones that are expanding to a new location. Maybe they need capital for marketing resources, inventory, right? Maybe it's just working capital. And then, of course, your higher tier of funding clients, people that are doing syndications, mergers and acquisitions, right? People that are buying and selling businesses and then brokering deals to that magnitude. So, what led me from that to where I am today, essentially, I was working under a mentor of mine and 2 years into running my funding company, which puts us at, I want to say January of this year. What happened is they essentially bought me out of my company, and then I was merged slash acquired into their lending conglomerate as one of the executives of their team. So that's what got me here today. I now represent Improve You. We essentially work with hundreds and hundreds and thousands of affiliates and co-branded partners to provide a back-end structure so that way you guys can start offering funding to your clients, your network, without having to learn it, without having to build the systems, without having to waste any time trying to figure out how to market for it, right? We pretty much implement solutions like that into your hands. So that's going to be one of the main key points that I'm going to be going over today with you guys, right? So I want to make sure that I paint a very clear picture as to what we're going to be speaking about today, right? So I want you guys to ask yourselves three questions today. Number one, what problem am I going to be solving for you today, right? My answer to that is maybe you have clients that need funding right now. Maybe you haven't tested the waters with being able to see who out of your network might need funding, right? And if they do, then what, right? What do you do? Where do you send them? What happens and what does that process look like, right? So that's one thing that I want to be able to make sure that I paint very clearly for you guys today. The second question is going to be, who is today's presentation meant for, right? My answer to that is anybody who's looking to add a service where you can implement hands-free and start making an additional 5 figures or even multiple 5 figures a month net revenue, not gross. I'm always going to talk about net revenue because I'd like to talk about what's going to be in your pocket, right? And then, of course, how to properly deploy that, how to set the right expectations. Who exactly are you going to be marketing to? And basically answering everything A through Z for you guys, right? That third question is going to be, what is my offer to combat that problem for you, right? Maybe you don't know how to deploy a strategy like this into your business. Maybe you don't even know if it is a good fit for the clientele that you have, right? So I want to make sure that I cover everything accordingly here today. Without further ado, let's go ahead and continue and get into it. So story time, right? What was my lowest point in the credit repair and funding industry and why? So long story short, this could take me 3 hours alone to talk about, right? So sometimes it can be a little bit difficult trying to condense it into a smaller time slot, but I'm going to do my best. So I believe in the concept of leverage. Now, what exactly is leverage, right? Some people look at leverage as something that can be a backbone to them, something that can help them buy time, right? And leverage can be multiple forms, right? The way that I talk about leveraging other people's capital, whether it's the bank or a lender or financial institution, the way that we paint that picture for clients is we paint the picture of leveraging OPM to leverage and buy time, right? Most people's problem is not necessarily that they need money, right? It has something to do with it, but in reality, what people are doing is buying time. So picture your average restaurant owner, right? Borrowing an additional $20,000 so that he can expand into a new location. That new location brings him income and cash flow into the business. But in reality, what it's doing is it's buying time for the business. Off of one new location, that could expand the lifeblood and the time span of that restaurant owner's business by a year, 2 years, 5 years, even 10 years, right? A lot of it just comes down to the metrics and the numbers that we're going off of in that aspect, right? Now, back to this original question of what was my lowest point in the credit repair and funding industry and why? My lowest point was when I had no leverage, right? I had no guidance. I had nobody that I could resort to for the high level questions. I had nobody that I can look up to, for direct mentorship. Basically, I had no blueprint, right? The worst position you can be in any business, right? Whether it's credit repair, funding, anywhere in financial services, or even any other industry for that matter, is being in a position to where you have no guidance, right? Who do you get guidance from? You get guidance from people that are credible, right? Anybody who can show you with a verified track record, a solid blueprint that can take you from point A to point B. I don't care who they are, what their background is. That's something that I would follow, right? So credibility is a big thing when it comes to that, right? Our company has been able to fund about 120 million year to date, right? Just this year alone. And we do that for all types of people, whether you are in the trucking industry, whether you're in Airbnb arbitrage, whether you are in e-commerce, right? Whether you are a high ticket coach or consultant looking to finance an offer, right? It's no shortage, or there is no shortage of people that need capital. And not only that, but the banks are going to be here tomorrow. They were here yesterday. They're going to be here 10 years from now. That system is not going anywhere, right? That was one of the reasons why I landed here in this industry because I consider it to be a recession-proof industry, right? The concept of leveraging capital, the fractional reserve system, it's not going anywhere, right? That's just kind of a little bit more about my background and what led me to get to this point today, right? So I want to talk very briefly about 6 components to success inside funding, right? So today we're going to be covering 3 out of the 6, and moving forward, there's going to be a QR code at the end of this presentation, so you guys can book a free call with me so that I can give you the remaining 3 components, right? The first one is going to be infrastructure. So very similar to the credit repair industry and really any subcategory or any niche inside of financial services. One thing that all of us have in common is we're all handling some very sensitive client data. We're talking about people's social security numbers, right? People's credit reports. We have access to their IDs and, have access to sometimes bank statements, utility bills, right? Things like that. You guys are experienced with that as well, being that some of these are components that are necessary during the dispute process, right? However, it's also very necessary during the funding process, right? Basically, in layman's terms, the way that we paint that picture for clients is instead of them having to go to a bank directly, maybe not know what they're applying for, know if that bank even likes to work with their industry, we take all the guesswork out of that equation, right? So having a proper infrastructure, a place where you can host all the client files, a place where you can house all the sensitive client data is very important, right? Not just for compliance purposes, but also for privacy and security. There's a lot of companies out there, right? For example, collection companies that just kind of sell people's data for pennies on the dollar, right? There's also a lot of predatory lending companies that do the same thing, right? So we like to set ourselves apart from that. We quite literally tell our clients when they come in, hey, listen, when you're working with us, you are only working with our conglomerate. We don't share any of your client data. We don't resell that. We have no need to. We know that we can provide a solution for you no matter where you're at in your business journey or even personal, if we're talking about consumer financing. And again, we want to be reputable. We want to make sure that we maintain integrity and servicing our clients, right? Again, there's a lot of predatory lending companies out there. Their interest is simply just to get the client stuck in an endless debt loop that is very, very hard to climb out of just because they make a big commission off of it or just because the lookout from the original lender that is working with them, right? We don't operate like that. There's a lot of lending companies that like to reach out to us, trying to work with us. Interest is, again, making sure that we have integrity with our clients. That is very sensitive, right? For a lot of people, it can ruin people's lives, but it can also catapult you if you have the right guidance and if you're doing things right. So the second component, right? This is going to be very important. Current data points, right? So, in general, what most people do is when they need capital, they apply with whatever bank or whatever credit union or lender they have a pre-existing relationship with, right? And if you think about it this way, it kind of makes sense. Let's say maybe I've been banking with Wells Fargo for the last years, right? Maybe I have a personal credit card with them. Maybe I have a personal checking account and a personal savings account with them. And let's say, sake of the example, I also have an auto loan with them, right? It would only make sense in my mind that Wells Fargo is willing to give me anything I'm looking for because I've established such a consistent relationship over time with them when it comes to leveraging their financial products, right? But what most people don't know is there are thousands and thousands of banks all across the country. Some of these banks are national, banks that you can see in almost every state, like Wells Fargo, Bank of America, Chase Bank, for example, right? Some of them can be regional. These could be banks that you only find in certain portions or certain of the country, like, for example, Truist Bank or US Bank or PNC Bank, right? Then we have fintech banks that don't necessarily have locations like Goldman Sachs, American Express, for example. There's more categories as well, like local credit unions, right? So you have Navy Federal, Digital Credit Union, PenFed Credit Union, right? Multiple tiers when it comes to lending, right? So when it comes to somebody who's looking for capital, having this many options can very, very easily overwhelm you. You don't know who to go to because you don't know who's going to be reliant to work with your specific industry. Let's say, for example, if it's your first time applying for capital under a new business, or let's say your first time leveraging capital under a business that you've had, it might be a little bit hard to decipher which type of funding product is best for you. Should I get a business credit card, right? Should I get a line of credit and do I even qualify for it, right? What about if I decide to leverage a term loan, something that is more of a contractual agreement with the same payments every month and the interest rate is already preset by the time that I, that agreement or sign that contract, right? There's a lot that's when it comes to deciphering what options are going to be best for a client during that funding process, right? Third component is going to be an asset-based mindset, right? Now, this is something that I believe in a lot because when it comes to leveraging capital, the banks want to partner up with you just as much as you want to partner up with them, believe it or not. However, one thing that I tell a lot of people is that they've been here much longer than we have. They've seen much more than we have, right? We're not the first person to come in thinking that we're instantly qualified to be able to leverage a product that at the end of the day, they have to mitigate risk in order to lend to us, right? Banks are in the business of mitigating risk as well, right? So, what exactly does this allow you to accomplish as a credit repair organization or as somebody who's in financial services, right? Being able to provide these solutions the right way to people is very detrimental. At the end of the day, somebody's necessity for capital, somebody's necessity for lending, somebody's necessity for funding is going to be answered at some point, right? Would you rather have that answered by you, somebody who has their best interest, somebody who they already trust because you've been working with them, or would you rather let them fall victim to, again, a predatory lending company that does not have their best interests, or let's say, for example, treats them like a number versus an individual scenario like should be treated as, right? So it's going to be very important, right? So this is where we start getting into how exactly underwriting works and get a little bit complex. I'm going to do my best to keep this as simple as possible for everybody. So there's going to be three C's in funding, no matter which funding company you're working with, no matter which bank you're working with. This is a structure that all financial institutions that allow you to leverage capital are going to follow. You need one out of these three C's in order to be lendable, right? They're in no particular order, just to make sure that I'm clear there. So the first one is going to be cash, right? If you are applying for personal funding, cash is basically going to be income to you. That can be verified by personal bank statements. That can be verified by personal tax returns, right? If you're a business or if you're operating as a business, then that's going to be cash flow, right? So this is going to be your business bank statements. This can be your business tax returns. This could also be a debt schedule or even a P&L sheet, profit and loss, something that shows the cash flow in relations to any debt that you already have, right? So this is basically the most transparent form out of all the three C's. This is quite literally somebody saying, I want to look at how much money you're making before I decide to let you borrow more money. That's exactly what it is. No more, no less. The second one is going to be credit, right? And I'm going to be a little bit of a myth buster here too. So credit is pretty self-explanatory, right? On average, a 700 plus can get you just about any lending option you're looking for, right? Now, banks, they're more concerned with seeing your profile as opposed to your score, right? A 700 plus score could be the same exact number for two different people, but it could also be two different profiles, right? Let's picture a 19-year-old kid, right? He's only had credit for a year. He has one secured card. He's got one singular auto loaned. Maybe mom and dad co-signed that for him, but he's got a 700, right? Whereas somebody else, think about a 35-year-old corporate businessman, right? This man has, mortgage. He has had multiple auto loans. He's got multiple credit cards in good standing, right? Maybe he even went to college and he's got student loans as well, right? Even though both of them have a 700 score, that 35-year-old corporate businessman is more lendable. And the reason why is because he's built up more credit history. He has more diversity with his accounts. He has a longer track record when it comes to building up credit history with different types of products. But he's also built relationships with multiple different lenders, right? And as long as those are taken care of, i.e., no late payments, no collections, of course, then they have no problem lending more to you, right? So that would essentially be credit. And cash credit, right, or any lendable product will more than likely pull a personal guarantor for that. So your personal credit cards, they'll check your credit score. Same thing goes for a loan, same thing goes for a line of credit, even a HELOC, right? Now, when I said earlier that I'm going to be a little bit of a myth buster, that's going to apply specifically to the business side. So what most people think is that they can build up a business credit profile and have that personally guarantor for the amount of funding they're looking to get without having to check your personal credit profile. This is both true and it's also false, right? A lot of times, if you're looking to build up your business credit, and if you want that to be the only thing that lenders consider, it has to be strong enough and it has to show a strong enough track record to where at minimum they see that you're making anywhere from 2 to 3 million a year. And again, this is also verified by documentation, such as tax returns and even business bank statements, right? Now, let's say, for example, if your business has not yet reached that point, but you still only want to use your business credit. A lot of times people are going to be limited to what's called net 30, net 60, or even net 90 accounts. Basically, think of charge cards and you have 30 days to pay off the entire balance that you've accumulated so that way they're still looking at you as a lendable borrower, right? So that second one is essentially going to be credit. Now, the third one, and this is a little bit more rare, but we do still see this quite often, is going to be collateral. Let's say, for example, if I have a paid off house or a paid off car, right, under my name, that's collateral that can be lendable against. As a business, maybe it's going to be heavy equipment and machinery, right? Maybe that's going to be paid off vehicles and assets under my business. That could even be, for accounts receivables that I have that are yet to be fulfilled. These are things that are also lendable against in the event that you don't have any cash flow or income, or let's say, for example, you don't want credit to become a factor, right? So if you don't have one, you'll have to rely on the others, right? And if you don't have two, you'll have to heavily rely on that last or that third option. So what exactly does a typical funding process look like for most people if you're looking to do this correctly, right? So one thing that we recommend to a lot of our clients, if you're looking to leverage funding from, let's say, a bank or a credit union or somebody that you've never had a relationship with, then build a relationship with them, right? We usually do this in the form of creating depository relationships so that way it generally brings more favorable results with a relationship established, right? We're going to want to assess the need, assess the qualification, build a funding plan, and then execute that funding plan as well. What exactly is a funding plan, if you might be wondering, right? Long story short, every bank and lender is going to pull from one specific credit reporting agency on your credit report, right? Let's say, for example, Chase Bank is known to pull from Experian. American Express in some parts of the country is known to pull from TransUnion. Let's say maybe KeyBank and Truist Bank, for example, they're known to pull from Equifax, right? So what we do is we organize a sequence in order based on how much funding somebody is looking for. And then, of course, taking their necessity for that operating capital in need. Maybe the first 30,000 comes from Chase Bank, right? Then 40,000 comes from American Express, who doesn't know Chase Bank already gave you 30,000. So they cannot use that as a reason to decline you. One of them is pulling from Experian. The other is going to be pulling from TransUnion, right? And then so on and so forth with the rest of the sequence, right? What exactly can funding be used for, right? If it's unsecured, then the funding that you're securing is typically used for anything that you need, whether it's to start a business, invest in opportunity, start a new venture. The world is literally your oyster, right? It can be used for anything that you need, right? I want to touch very lightly on liquidation. Let's say, for example, if you're doing what's called a credit stack, right? Maybe you're stacking business credit cards because you're a startup company and you're looking to leverage funding, but maybe you don't qualify for those higher tier lending products like a line of credit or maybe even a business term loan. Typically, your main option there is going to be business credit cards, right? But maybe you need cash. Maybe you're not able to send a wire from a business credit card, or maybe you're not able to effectively put something in liquid cash from a business credit card. Liquidation is essentially a process that you can use to get the cash off of a credit card. Typically, I recommend using a third party for efficiency. I never recommend doing this yourself with your own merchant account. And when you get that QR code at the end of this presentation, I'll be able to explain a little bit more in depth as to why that is, right? One thing that I want everybody to know, and one thing that we also tell all of our clients is if this is done successfully, then one thing you got to realize is this is not just a process that you're only going to want to leverage one time, right? If you were able to successfully borrow money and deploy that into an asset, maybe deploy that into, a growing business, deploy that into an investment, there's going to be a necessity and a desire in the future at some point to do it again. Why? Because it makes your life easier, right? Saying cash is king, credit is queen, right? So this is repeatable every 3 to 6 months, as long as we're doing a proper inquiry removal process. And then if you're doing funding on the consumer side, just let those accounts age so that way the next person you apply for can't say, we just saw that you got approved for 2 accounts 30 days ago or 60 days ago, right? I also have a free tier 1 no doc lender list that I'd like to send to everybody. So get Stephanie at the end of this presentation so that I can send it to her. She can disperse it out to everybody. Or if you want to send me a message on Instagram at Organic Papito, I'll be more than happy to send you that. This is essentially a list of about 50 banks that are available in about 47 states, so most of the country, and they have what's called no to low doc programs. So that means if you're looking to access funding, maybe you don't have your tax returns in order, maybe your business bank statements or even your personal bank statements are a little inconsistent, they're not going to look at that, right? So they're basically basing their underwriting decisions off of credit. And that is a free list, so message me out. I'll be more than happy to send that over to you guys. So obviously, client results, right? This is something that's going to be very important. As a company, we're currently averaging about $130,000 to $150,000 funded per client on average. Now, that doesn't mean that everybody who walks in through the door is going to get 6 figures in funding, right? Not everybody has a necessity for that. That doesn't mean that we not go past, $300,000 in funding as well. What we're looking to do here is have a service that can apply to every tier and every type of entrepreneur, whether it's, the entrepreneur that needs $20,000 to open up a t-shirt shop, or whether that is, a old established company that makes $9 million a year verified, and they need $300,000 cash by next Friday, right? So being able to service people on both sides of the spectrum is something that we're very, very passionate about, right? Why limit yourself to only being able to work with a smaller demographic, right? So what we do as a company, like I mentioned near the beginning of this call, we like to make ourselves the back-end infrastructure to others that are in financial services, regardless of what niche or what subcategory they're in. And the way that we do this is in the form of co-brand partnerships and affiliate relationships, right? One thing that we have in common at every single tier is we are handling fulfillment on the back end. And essentially, our partner, whether it's an affiliate, whether it's a co-brand partner, whether it is a referral partner, right? They're mainly handling client acquisition on the front end. That can be as simple as going through your network of clients, going through your network of, family, past coworkers that you have. And if they have a necessity for capital, whether it's for personal use or for business use, then that's already a perfect client, right? And anything past that is essentially being able to make sure that they are in the most qualified position to obtain the lending so that way we can take them through that process in an amicable time frame, right? So what we do is we get people who are in real estate, in credit repair, and life insurance, right? We get them a new revenue stream or an additional revenue stream by being able to offer funding to your clients without having to do any of the work on it, right? We want to make sure that we are compliant by being able to make sure that you guys know exactly what's going on with your clients as well, right? So what we do is we give you guys the opportunity and access to track every step of the way as far as where a client is at in the process, which one of my team members they're working with in particular, and then of course, how much funding have they acquired, right? We're typically paying out anywhere from 20 to 50% commissions on the cash collected that we receive from a funding deal right back to the field. Again, that's to our affiliates, our co-brand partners, our referral partners, pretty much anybody who has clientele that needs for one reason or another, right? So what's next? That's going to be up to you, right? What I want to offer you guys is 10 spots for any action takers who are looking to get on a call with me for a full breakdown, including the remaining 3 components, right, to a successful funding offer. And then, of course, a proper strategy session on how to best implement this service into your existing book of services or your existing network so that way we can break an additional 5 figures monthly within 45 days or less with very minimal work, right? One thing that I want to give to everybody as well, which is going to be 100% free also, in addition to that no doc lender list that I mentioned earlier, I want to give you guys access to one of our flagship financial literacy courses for free, right? This is something that we sell to clients, but you guys here are all business owners, right? Everybody here knows what it's like to have an opportunity to work for yourself and determine your own income, right? That's something that's a blessing to me. That's not something that everybody just wakes up and gets to take advantage of, right? So this financial literacy course, I believe, is going to be something that can add a lot more value to not only your clients, if you want to give them value, but also to you, right? We focus on what we're doing today. We tend to focus on planning for tomorrow. The best thing that you can do is make sure that you have a roadmap that's going to help you get from where you're at now to where you want to go. All right. With that said, that brings me to the end of my presentation. So, Steph, what I'll do is I'm going to go ahead and pass it to you so that they can either answer some questions, do a Q&A for the remaining 20 minutes that we have. And matter of fact, just to make sure that I'm doing this properly too, I'm going to keep this QR code up. Let me go ahead and reshare my screen.
Yeah.
So
Put the QR code up
yeah.
for everyone.
Yep. Not a
Because
problem.
that's a good deal, you guys. Book it with Kevin, so that you can get all the information. That was an amazing presentation, Kevin. Thank you so much for that. For me, like, I love this because I don't want to learn funding. I'll tell you that right now. Like, I have things to learn. I don't want to learn how to do funding on my own. Partnering up with a company like this is just so much easier. You could be making money right away without that intense learning curve on funding. So I book that with Kevin. And then also the guide he was talking about, we'll go ahead, Kevin, if you just email that to me, we will include that
Yeah.
in the that we send out tomorrow for everyone.
Yeah, absolutely. So the doc lender list, that's going to be something that I can email over to you. You can send to everybody who's on today's call too. As far as the financial literacy course, what I'm going to want to do, guys, is I'm going to want to collect everybody's email. I can do that through Stephanie as well. If I can get the email address for everybody who was in attendance to today's call, or let's say anybody who is also a part of your community, maybe they weren't able to make it out today, I'll give you guys access to that as well. And then you'll get an email so that you can easily open that and then go through it.
Okay, yeah, we don't. Kim, are you still on the call? We'll figure out how to get the emails. We don't have register for the.
Yeah, well, I'll send out tomorrow, and whoever wants access to the course can just respond, and then I'll get you the emails over to you.
Sounds like a plan.
Perfect. So you hear that, you guys? Just go ahead and respond to the replay tomorrow if you want access to that that he's offering you for free. So, all right. So let's go ahead. Albert's had his hand raised for a while. Let's go ahead and take Albert's question.
Having a great presentation. Looking for what you possibly. Now this is I see B2B. So let's see. Okay, correct me if I'm wrong. Now I have customers and are just looking to consolidate their debt. Is this something you can do too, or is it not to waste their time on it? I don't know. What because they want to bring their debt down, and the thing now is because they have equity in their property, and that's what they're trying to do. Is consolidate. Is this something that funding available for that, or is it more for like business startups?
So it'll depend on somebody's situation in particular. So if somebody's looking to consolidate personal debt, let's say, for example, for the purpose of getting business funding, a lot of lenders and underwriters, they're going to see that they're already over leveraged, right? So they might be a little bit skittish to deploy additional capital to that consumer. So we have partners that can consolidate debt for the consumer. That's not something that we do as an internal service inside of ImproveU, but sometimes we can help clients bring down utilization on credit cards, for example, so that way the utilization bumps up their FICO scores so that they then become qualifiable for additional lending later on. So I wouldn't say it's something that we do daily. I would say out of every 10 people that ask us for that, just to be super accurate to you, it's maybe every 2 out of 10 people that we're able to do that for, just because it depends on how over leveraged they are, what the bank or lender is, and then the structure of the remainder of their profile. So that's the best answer I can really give. I would say maybe every 2 out of 10 people, they're able to have it done for them, even if it's not through us or one of our brokers from any other companies, right? Having a lot of debt is something that affects your, as I'm sure you guys know too. But the main thing that drags a lot of people down as far as scores and opportunities is going to be credit card utilization. So I'll say every 10 people we can do more.
Thank you.
Yep, anytime. Anybody else? Not everybody at once, please.
So we have about 15 more minutes. So who has any additional questions, Kevin?
I think I see Brandon's hand raised. What's that, Brandon?
Oh, hey, Brandon. Where'd Brandon go?
Hey, I'm right here.
Oh.
I popped on a little the webinar. So Kevin, are you to do the funding and partner up with us as an affiliate? Is that kind of or what is that?
Yeah, that's exactly what that looks like. I know you some of what I spoke about in the beginning too. Definitely would recommend if you do have time, once that replay comes out, take a look at that, because I covered it inside of the beginning as far as who I do, how we add value to you guys. So if any of that sounds like something that you're looking to leverage, my biggest thing is being able to add value to you, your current set of clients, your future set of clients, and anybody in your network, right? So any of them be discussed when you book a call with me.
Yeah, I booked it Saturday just to kind of get an idea how together, or what you're doing, what I'm doing, and and seeing how lines, if you're accessing other things because usually I have that out a lot, so I just need someone new to be able to refer that out to on some of the things I can take care of, and I just need to figure out what that is, and then what the other heavier load I can maybe give to you guys. So, and then kind of see what that looks like.
Absolutely. We're doing the back-end fulfillment route to about 102 different funding companies. So typically we have access to a range of about 5,000 different products. So let's say if it's something that we can help add to your business, maybe something that you don't already have access to, that alone is a win in my book, right? So I'm looking forward to diving a little bit deeper into that with you on Saturday.
Yeah, that'd be awesome. Thanks so much. Sounds great.
Anytime.
Hey guys, we still have a few more minutes. Oh, Tabitha, go ahead.
So do you money for funding? Like, do you do, what do you, I missed the book here, kind of which things you fund from.
Yeah. So I'll go a bit of a list, right? So just to be a DSCR and mortgage lending is not something that we do. You have to be licensed for that when it comes to having an NMLS license, right? So our main core demographic of funding products, it can include personal or consumer funding. It can be business funding, whether it's a line of credit, term loan, let's say for business credit card as well. We also work with the SBA. So let's say if somebody's looking to acquire a cash flowing business, we can get that funded through the SBA for them. Maybe if somebody needs equipment or business, we have global lenders that can take care of that as well. Maybe somebody has bad credit, but they're making good money in their business, right? That would be revenue-based financing. So that's also something we can do. When it comes to, let's say, for example, real estate, that's where we have multiple options for a subcategory like that. We can do ground up construction, fix and flip. We can do rehabs. We can do like long-term properties, commercial properties, wide range of things that we can do.
Okay, cool.
Anybody else?
On mute, Stephanie.
Oh, here, I'm just talking away. No idea I'm on mute. Yeah, so any questions before we wrap up this evening?
Even if it's something that you guys come up with, again, more than happy to let me know on that call direct with me too. So whatever works best for you guys.
Yep, Pedro, go ahead.
Yes, thank you. I don't know if this was covered, but I caught of it. Will you assist in, I heard you, as far as the business, would that be for the corporation and or LLC? What if it's a new business or existing business? Can you assist in those as well?
Yeah, absolutely. You can get business funding even if your business is 3 days old, believe it or not, right? Some people think that you need to have a minimum age to your LLC or your entity, for example. But no, that's definitely something our funding advisors are more than capable of assisting with. A lot of it just kind of comes down to specific funding file and then what the goal is, what the timeline is, what the use case for the capital is. That might sound a little bit repetitive, but the reason why I say that over and over again is because it's not a one size fits all, right? Something that might be best for one client might not necessarily be the best fit for a different client for multiple reasons across different variables. But to answer your question, yes, absolutely. That is something that we help out with every day.
All right, good deal. Thank you much.
Excellent.
Okay, and you guys, link Shay, the QR code is on the screen right now. You can click that to schedule a call, unless you're on your phone, then you probably can't. Do you have an actual link, Kevin?
Yes, what I can do is I can actually, yeah, I do think actually. So if you guys type this in, work with Kagus. This is basically my direct site. And then there's going to be a button that says book a call directly with me, right? So super easy website. It's going to be workwithkevin.vegas. And then this link that this QR code takes you is going to be at the bottom of my page. It's literally going to say book a call with Kevin. Easy enough.
Okay, so I would definitely take advantage of that strategy session. The least that can happen is that you learn a lot, right? You're going to learn a lot more about funding, and it's going to be really helpful for you.
Absolutely. Appreciate you having me on today, Stephanie.
Yep, I really appreciate you on and educating us a little bit more on funding. And I hope everybody takes advantage of that free strategy session. And thank you so much for all the goodies you gave away today in the call. Have a wonderful night, and we'll see you all next week.